Hi, everyone, and welcome to the January 2024 Air Taxi Stocks monthly recap. Let's get to it. So, again, we are reviewing the six publicly traded air taxis, urban air mobility, advanced air mobility companies in the NYSE and the NASDAQ. These are Archer, ehang, Eve Air Mobility, Vertical Aerospace, Joby, and Lilium. You have the ticker symbols here, and in red are the outliers that we spoke about last time. Let's look at the press releases for this month. And let's start with ehang. The main one is that customers are starting to take delivery of the ehang aircraft that has been type certificated in October. Now, the type certificate validates the design of an aircraft. The airworthiness certificate confirms that a particular aircraft of that design is safe for operation. So the airworthiness certificate is issued for in each individual aircraft after it has been manufactured. So it means that now ehang starts delivering the type certificated aircraft to their customers. Here's yet another article whining about how ehang is mistreated by Western detractors. Now, I don't want to waste too much time on this because we spoke about it at length many times. But these guys reporting on ehang have obviously not read the type certificate yet. The latest lawsuit claims that ehang did not disclose the restrictions imposed by the very same type certificate it is bragging about. So, one more time, the ehang aircraft is a drone and cannot operate in urban settings. You guys can go to timestamp 1130 on the video card appearing right now to learn more. And if you have time, watch the whole video to get the details of the story so you can analyze better this type of articles. Let's go to Lilium now. And let's look at the highlighted one since the stock popped 20% on this announcement. The language used in the press release suggests a collaboration and the exploration of a strategic partnership. So, key phrases such as memorandum of understanding, explore opportunities, and strategic partnership typically imply preliminary stage of discussion and potential collaboration. These terms signify mutual interest. One piece of information that is worth mentioning is that Lufthansa Group owns Lufthansa Technik, which is one of the major repair and overhaul players in the world. So to me, if there is any flow of money from this agreement, at least for the short and medium term, it will be from Lilium to Lufthansa for future maintenance of their aircraft. Okay, so the stock popped 20%, not sure why, but it popped. The main news to me, Lilium did not release the Q3 financials. I checked many times, many sources, but couldn't find any. You can see here 2022, they have 4 releases, and then 2023, only Q2 23, no Q3 23. So something to take note of here. Let's look at some metrics, and our main one here is to look at the valuation metric that we built. And as a reminder, it's not based on price earning or other standard valuation method. It is based on how the enterprise value relates to the value of the firm orders the company received. Again, why firm orders? Because they create a contractual obligation between the buyer and the seller, and they usually come with a down payment. And this is what we can check and verify. All the other form of orders, so optionals, non-firm, etc., are sometimes not worth the paper they're printed on until they generate a down payment. And this topic of valuation becomes tricky for air taxi companies because some of them intend to operate their aircraft, so act basically like an airline. Let's take the example of Archer, and this is straight from their presentations. Their business model is centered, or so they say, around 2 revenue streams. And they say unique here. There's really nothing unique about those revenue streams. And let's look at these. The one on the left is an airline revenue stream. Aerial ride-sharing one is an airline revenue stream. The right side is the OEM revenue stream. So there's really nothing unique about those. The OEM side is straightforward. They receive orders for their aircraft, okay? They book them and then they deliver them. You can attach value to that. The valuation of the airline revenue stream is a little bit more complex at this stage of the industry. No one has an idea about customer adoption, pricing, etc. So you'll have to trust what the insiders tell you. Here's what I mean by trust what the insider tell you. This is again straight from Archer's company's presentations. They talk about a market opportunity, referring to a Morgan Stanley report that predicts that urban air mobility is to be a $29 billion market by 2030, so basically 6 years from now, and a $1 trillion market by 2040. Define urban air mobility market. Is it Archer's market only? Or does it include Archer's suppliers, infrastructure providers like vertiports, ground battery charging systems, real estate development, air traffic management, pilot training, and I can keep going on and on and on. And then once that's defined, what is the Archer portion of that market? 1%, 10%, 20%, more, less? Do you see my point? If you have ever built a business plan to raise money, you know that you can tweak it to show what suits you. That business plan will generate an EBITDA, which will serve as a baseline for valuation dependent on the multiples. Let's go to an extreme here. Joby states that it will operate 100% as an airline and that they do not intend to sell aircraft. They also refer to the Morgan Stanley report, but they go a decade more, throw in a $9 trillion market in 2050. So how do you put a valuation range on this? You want to trust the insiders? Doesn't sound like a good idea to me. All right, let's crunch some numbers here. So it's fairly straightforward. So we have for each ticker the enterprise value. This is straight from Schwab. The number of firm orders, the unit price for each aircraft, so the total firm order value, and then we divide the enterprise value by the firm order value. Let's look at the chart here. So taking the same numbers in this column here, just put them into a visual representation. To the left, undervalued, to the right, overvalued. And again, this is relative. This is not overvalued in the absolute, but comparing the companies, each one with the other. This chart tells you there is a valuation problem with ehang, which the Hindenburg research report dated November 7 points to, in addition to other issues. Check my video on that and forgive the bad sound quality. Joby and Eve are not represented since they don't have any firm order. Let's look at the charts now for the 1 year period ending December 31st, 2023. Archer clearly up for the year, clear stage 2, facing resistance at 7. ehang up for the last year, but flat for the last 6 months. It's called losing steam. It's in a weak stage 2. Eve overall flat for the year. The long-term moving averages are also flat. Clear downtrend here for vertical aerospace, and clearly it's in a stage 4. And take note of this bar here. We'll talk more about it. Joby up for the year, but struggling to get above the 30-week moving average in a weak stage 2 as well. Pretty much flat on the last 3-4 months, so losing steam as well. Lilium about to make a golden cross on the daily, flat on the weekly. We'll see if it can break out from stage 1. And this is comparing the 6 stocks for the entire year and adding to benchmark XAR, which is the Aerospace and Defense ETF, and IWM as a proxy for the small caps. Clearly, there are 3 winners here, Archer, Joby, and ehang, in a clear loser, vertical aerospace. Lilium and Eve are up for the year, but below the benchmarks. We're looking at the shares shorted here in millions, flat for the first 4 tickers. Joby is seeing an increase since end of October, but Lilium shorted shares have more than doubled in the last month and a half, clearly going against the chart. We will see if this trend continued during the last 2 weeks of December and moving forward, but it's something to take note of. The trend in Lilium is confirmed when looking at the short percentages. Archer and ehang continue to be above the 20% level, which is considered bearish by some standards, and Joby is slowly getting there. Let's look at the insider activity and ownership. Archer mainly green, and this is what you want to see in a company. So insiders buying shares. The only sale this year was from the co-founder and former co-CEO. He had a fallout with the current CEO and the board and left last year. He's since founded another company, and my suspicion is that he's funding it with his remaining shares from Archer. Ownership structure here, good mix between institutional, general public, and insiders. ehang, not enough data to determine if shares have been acquired or sold. This is the type of opacity shareholders have to put up with when owning shares in many non-US companies. ehang is incorporated in the Cayman Islands, for your information. Ownership structure, the general public is at 46%, and the individual insiders are actually just one, who is the founder and CEO with 34.34% as of the last reported holding date, which was March 31st, 2023, so 9 months ago. So the investors are completely blind to what the founder and CEO is doing with his shares. When you invest in non-US based companies, this is a risk factor you need to take into account. And you should ask yourself the following question. What is a discount to fair value for me to take this risk compared to investing in a US-based company where the insiders are obliged by law to disclose what they did with their shares quasi-immediately? Clearly, the public is at risk here. Airmobility, so same thing as ehang, but the next chart will explain it. It is owned at more than 85% by Embraer. I don't even know why they listed the company if it's to keep the capital structure this way. Embraer has money. They could have kept it as another business unit and spin it off after it matures. Just doesn't make sense to me. Vertical aerospace, same as even ehang, not enough data to determine if the insiders have bought or sold shares. Ownership structure, fairly similar to Eve, except that this is a one-man show. The individual insider is the founder and CEO. Let's look now at the volume bar I mentioned earlier in the presentation. So on December 28th, the trade-in day before the last of the 2023 calendar year, almost 6 million shares were sold. The chart to the right shows who owns this order of magnitude of shares in EVTL. There are only 3 shareholders. So something happened. We will know more reading the disclosures next month, but I hope it is not American Airlines because it would mean the end of EVTL in my opinion, and I hope I'm wrong. Joby, a lot of insiders selling at values around $3.5 earlier this year. They all happened the same day, so it may have been an automatic sale of granted shares, but it's the complete opposite of Archer. Archer had a lot of green. Balanced ownership structure here for Joby. Lilium, same as ehang and all the others. Small institutional ownership when it comes to Lilium. General public is the highest. Let's look at the shareholders' dilution here over the past year. And this chart is telling you why some stocks have not made it back to the $10 par value of their SPAC merger. They are still aggressively raising capital by issuing mixed securities like shares and warrants. So the dilution in Lilium is particularly horrible. In the case of Archer, they use shares to settle lawsuits like in the case of Whisk. I also have a video that details the settlement agreement. So unless the stock rose enough to compensate for the dilution, shareholders are losing money. Something to consider when looking at these startups. That's it for this month, guys. Stay out of trouble and see you in early February.